Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Monday, March 2nd, 2026. If you're just looking at the push notifications on your phone right now, you probably want to crawl right back into bed.
Yeah, it is a really heavy morning out there.
It is. We have Operation Epic Fury really escalating in the Middle East. We've got the Fear and Greed Index flashing these extreme warning signals we just haven't seen in over a year. Geopolitical anxiety is, well, it's pretty much through the roof.
It's palpable, but if you actually close the news apps and open up the on-chain data, you see this completely different reality.
Right.
The actual plumbing of the global financial system isn't panicking at all. In fact, it's seeing adoption metrics that, honestly, we didn't expect to hit until maybe 2027 or 2028.
And that's exactly the disconnect we really need to figure out today. That's our mission for this deep dive. Because usually when the world feels like it's on fire, everything just sells off.
Everything goes down, yeah.
Exactly. But we're seeing this weird split-screen moment. One side is this old-world kinetic warfare, and the other side is this silent but massive acceleration in crypto payments and AI infrastructure.
Right. But we do need to be careful not to just glaze over the conflict itself. The stack today includes reports from the ground regarding the U.S., Israel, and Iran. And, that context really drives everything else.
Absolutely.
But we also have financial data on the Lightning Network that completely contradicts the whole fear narrative, plus a massive update from PayPal regarding how AI agents actually handle money, and a really significant defense contract shakeup at the Pentagon involving OpenAI.
Yeah, that Pentagon story is actually pretty unnerving when you read the fine print. But let's start with the macro picture. It is March 2026. Operation Epic Fury is currently underway. The stated goal from the coalition is regime change. Now, we aren't military analysts here.
No, definitely not.
But we are market analysts. So how is capital actually interpreting this massive geopolitical event?
Oh, the initial reaction was just textbook panic. When the news first broke, crypto assets across the board took a massive nosedive.
Just a sea of red.
Exactly. High volatility, massive liquidations everywhere. That is the classic knee-jerk risk-off response you get with sudden uncertainty.
But then we saw that really weird reversal. A specific report came out regarding the death of a high-ranking official within the regime. It was a confirmed kill, and Bitcoin immediately pumped right back up to $68,700, which, I mean, it felt almost ghoulish to watch.
It feels incredibly cold, but it highlights a market mechanism that we often misunderstand. Markets don't necessarily trade on good news or bad news in a moral sense. They trade on clarity. The invasion itself was this massive unknown variable. Like, how long is it going to last? How messy is it going to get?
A market hates a vacuum.
Exactly. So the confirmation of that death was a concrete data point. It narrowed the probability tone of the overall outcome.
So essentially, the market isn't cheering for the war itself, it's cheering for a timeline.
That's it. The algorithm sees a higher probability of a swift conclusion, so it reallocates capital based on that. But we shouldn't let that one piece of price action fool us into thinking everything is totally fine out there.
No, definitely not, because the sentiment is still incredibly fragile. I mean, the fear and greed index is sitting at 16 right now.
Yeah, that's extreme fear.
We haven't seen extreme fear levels like that in quite a while, especially with Bitcoin hovering near $70,000. That is a massive divergence. Usually a 16 means the price is in freefall.
And that divergence is exactly the signal you should be paying attention to. You have capital flight from the ETFs. The traditional finance crowd is literally pulling their money out because they're terrified by the geopolitical headlines.
They're turning off the TV and selling.
Right. But the native crypto liquidity is staying put, or they're even actively buying the dip. So it's this real-time battle between the old guard's traditional risk assessment and the new guard's structural thesis.
Speaking of risk assessment, we have a really important note here from Josh at Blockchain DXB about the information war that's running parallel to Operation Epic Fury.
This is critical, especially if you are operating anywhere in that region. The sheer volume of deepfakes and totally fabricated reports circulating on social media right now it's just unprecedented.
It's a fog of war, but entirely digital.
Exactly. The official advice from the ground is to basically ignore your algorithmic social feeds completely.
Right. So if you are in Dubai, or if you have business interests in the UAE, the trusted sources specifically provided in the reports were WAM, which is the Emirates news agency, the Dubai Media Office, and the Ministry of Defense.
Relying on literally anything else right now is just a massive gamble. The official reports indicate that while the wider region is tense, obviously the UAE itself remains completely stable. But the digital noise on Twitter and elsewhere is explicitly designed to make you think otherwise.
Okay, so let's pivot to the plumbing side of things.
Yeah.
Because this is where that whole fear narrative completely falls apart.
Yeah.
We have new data on the Bitcoin Lightning Network for November 2025. And I actually had to double check these numbers myself because the growth curve is practically vertical.
Yeah, I honestly thought it was a typo when I first read it. So November 2024 saw 286.5 million transactions.
Which is a lot.
It's a ton. But November 2025, 1.7 billion.
A billion.
Over a billion. That is a 4x increase in just 12 months.
And this all happened while mainstream pundits were still arguing about whether Bitcoin was too volatile to ever be used as an actual currency.
Well, that argument is officially dead now. You don't get over a billion individual transactions just from speculators moving funds around. This represents a fundamental structural shift in actual utility. We've officially moved past the pure store of value phase where people just sit on their Bitcoin in a cold wallet.
Right, the digital gold narrative.
Exactly. We are now firmly in the medium of exchange phase.
And the statistic that really jumps out at me from the report is the average payment size. It's roughly $223. That's not someone buying a cup of coffee. That's not a tiny micropayment for a web article.
That was the biggest surprise in the data, because the narrative for the Lightning Network has always been about tipping and coffee. But $223, that's a commercial invoice.
Right.
That is a B2B payment or a remittance or a really significant retail purchase. It strongly suggests that actual businesses are using this payment rail, most likely to avoid heavy credit card processing fees or to settle cross-border transactions instantly.
We have a really concrete example of this institutional scale with Kraken. The exchange just facilitated a $1 million transaction entirely on the Lightning Network.
Which proves the deeper liquidity is finally there. Just a few years ago, trying to route a $1 million transfer through Lightning would have either failed completely or taken forever to find a path. Now, it clears instantly. This is exactly what I mean by the split-screen reality. The mainstream headlines are screaming about a world war, but the financial rails underneath are casually processing billion-dollar volumes faster and cheaper than humanity has ever seen.
It is quite literally functioning as a parallel economy that just doesn't care about the news cycle. And that brings us perfectly to the other major infrastructure upgrade we found in the sources, PayPal. Now, we've talked about stablecoins ad nauseum on this show, but this new collaboration with MoonPay and M0 feels fundamentally different.
It's different because of the underlying architecture. This isn't just PayPal launching yet another standalone coin. This is an entire platform called PYUSDx.
Right, it's a triad.
Exactly. It's a three-way collaboration. PayPal provides the heavy regulatory dollar backing, MoonPay handles the user distribution and compliance side, and M0 provides the actual on-chain infrastructure to mint it.
I really want to clarify M0's role here because their name has popped up in a few of our deep dives lately. They're essentially functioning as the printing press for the digital age, right?
That's a great way to put it. Think of M0 as the core issuance layer. They handle the incredibly complex technical and legal framework that allows a digital token to legally represent a US dollar on a blockchain. By partnering with them, PayPal is essentially offering stablecoins as a service.
So instead of a new tech company spending 18 months trying to secure money transmitter licenses in 50 states and building out audited smart contracts from scratch, they can just plug into this existing stack.
Exactly. It reduces the time to market for a custom stablecoin from months or years down to literally days. But the broader implication isn't just that everyday users get more stablecoin options. The source material highlights a very specific, fascinating use case.
You're talking about USD.ai.
Yes.
This is the part where my brain genuinely starts to melt a little bit. USD.ai. A stablecoin explicitly designed for artificial intelligence.
We really need to stop thinking of AI as just a friendly chatbot that helps you write emails. We are rapidly moving toward what the industry calls agentic AI.
Agents that act on your behalf.
Exactly. These are autonomous software programs that have specific goals. They need to rent their own server space, they need to purchase proprietary data sets, and they need to pay other AI agents to complete subtasks, right? And an autonomous piece of code cannot walk into a Wells Fargo and open a business checking account. It doesn't have a passport or a social security number.
So USD.ai is essentially acting as the economic identity for a piece of software.
It is programmable money designed specifically for programmable entities. If you have an AI agent that optimizes global supply chains or negotiates digital ad space, it requires a wallet that can settle transactions instantly, 247, without any human intervention or approval delays.
It's wild.
This PayPal and M0 infrastructure is literally building the baseline banking rails for a non-human economy.
Which sets up a pretty dystopian segue, to be honest. We are giving AI the ability to autonomously spend money at the exact same moment the United States government is actively deciding which AI companies are allowed to hold the keys to lethal weapons.
The timing is just incredible. This Department of War story, and by the way, note the official reversion back to that pre-1947 name in the reports. This is probably the most significant macro signal for the tech industry we've seen all year.
Yeah, the headline from the report is that Secretary Pete Hegseth officially designated Anthropic as a quote-unquote supply chain risk. Now, just for context, Anthropic is an American company. They are based in San Francisco. They are not some foreign adversary.
That designation is the regulatory nuclear option. Usually, the supply chain risk label is strictly reserved for foreign companies like Huawei or ZTE entities that are suspected of being actively controlled by foreign intelligence services.
Right, espionage threats.
Exactly. Applying that specific label to a highly regarded U.S. tech company purely because of an ethical disagreement is a massive, massive precedent.
And the disagreement here was specifically over mass domestic surveillance and autonomous weapons, right? The military wanted those capabilities, and Anthropic just flat out said no.
Correct. Anthropic totally refused to negotiate on those terms. Their leadership essentially said, we will not build or provide tools that can spy on American citizens en masse, or software that can execute lethal force without a human pulling the trigger.
And the Department of War didn't just shrug and walk away. They effectively blacklisted them.
Right. They are aggressively signaling to the market that ethical noncompliance is now considered a national security threat.
which sends an absolute chill through Silicon Valley. It essentially means if you have hard moral lines that your company won't cross, you might get entirely cut out of the most lucrative government contracts in history.
Or worse, you get officially viewed as a liability to the state. So after breaking Anthropic, the Department of War turned right around and signed a massive deal with OpenAI.
Now, OpenAI has always talked a really big game about AI safety and alignment. Did they just fold to the pressure?
Well, it's complicated. The details of the contract are fascinating. OpenAI agreed to deploy their advanced models into highly classified environments. We're talking secure, air-gapped government clouds. But they did manage to include some strict guardrails. The contract explicitly forbids the use of their technology for mass domestic surveillance, and it legally requires strict human approval for any deployment of lethal force.
But let's be real here for a second. If you have a next-generation AI system analyzing chaotic battlefield data in literal milliseconds, and it flags a target for a drone strike, the so-called human approval is just some guy pressing a button on a screen.
The human can't actually verify the raw data at that speed.
Right, they're just trusting the machine's math.
That is what the industry calls the rubber stamp problem. At a certain speed, the human operator actually becomes a liability. They're a bottleneck in the kill chain. So the contract legally says human in the loop, but the raw physics of modern warfare are pushing inexorably toward full automation.
It's inevitable.
The friction here is that OpenAI is desperately trying to maintain its public safety soul while quietly taking the massive defense dollars. Whether those paper guardrails actually hold up in a real kinetic conflict like Operation Epic Fury is going to be the real test.
So we have this incredible bifurcation happening right now. The commercial tech sector is busy building PYUSDx so fully autonomous agents can trade and spend money at light speed. Meanwhile, the defense sector is pretending they can keep a human in the loop for lethal decisions, even though the technology is already outpacing human reaction times.
And the one company that refused to compromise on that illusion, Anthropic, is being actively pushed to the margins by the state. It strongly suggests the government ultimately values total compliance and raw capability far above any ethical hesitation.
It is an incredibly messy situation in D.C. But if we shift our focus back over to the Middle East, specifically looking at Dubai, we see a totally different approach to this relationship between state power and bleeding-edge tech.
Yeah, it feels significantly less like a fight and much more like a corporate merger.
Exactly. It's regulation functioning as an enabler rather than a barrier. Over here in the U.S., regulators are still tied up suing crypto companies over old securities laws.
Sure.
But in Dubai, VAR, the Virtual Asset Regulatory Authority, is casually issuing approvals for concepts that literally sound like science fiction.
We're talking about the ShipFinex news.
Yes, ShipFinex. The report states they just received in-principle approval from VRA to tokenize maritime assets.
And this isn't just buying some meme crypto coin with a dog on it. This represents actual physical steel floating out in the ocean.
Real-world utility.
Exactly. It's the tokenization of real-world assets, RWA, finally hitting the heavy industry sector. Commercial shipping is a massive, incredibly capital-intensive business, and historically it's been totally illiquid. If you own a massive cargo ship and you need liquidity, you can't just easily sell a piece of it to raise cash.
And on the flip side, if you're just a regular retail investor, you can't exactly buy a small part of a cargo ship to get a piece of that shipping yield. You're locked out of the asset class completely.
Right. It was strictly reserved for massive institutional funds, but ShipFinex is using distributed ledger technology to completely fractionalize that ownership. You can theoretically own 0.001% of a global tanker fleet.
Which is cool on its own.
But the reason this specific story matters is the VARA regulatory approval. It means the government regulator has officially vetted the legal structure of the tokens. If that cargo ship sinks, or if it generates a massive profit, the person holding that digital token has actual enforceable legal recourse.
That is the crucial missing link.
Yeah.
We've had the blockchain tech to do this kind of tokenization for years,
Yeah.
but without a solid legal wrapper backing it up, it was really just a novelty. Dubai is stepping up and providing that state-backed wrapper.
And they are applying this aggressive efficiency mindset literally everywhere. Just look at the other local story about Parkin.
Right, Parkin PJSC. They're installing 1,000 AI-enabled cameras across major hubs like the World Trade Center and Expo City.
This connects perfectly back to that efficiency theme. Driving and parking in Dubai can be, well, pretty spirited. The source data shows that drivers currently spend an average of 12 minutes just aimlessly hunting for a parking spot in these high-density areas.
Which is 12 minutes of just burning gas, frustrating the driver, and clogging up the local roads.
So this new AI system uses advanced computer vision to actively track every single parking spot in the garage in real time. It then guides the driver via a mobile app directly to an open bay. Their stated metric is to cut that average search time from 12 minutes down to under 4 minutes.
Now, on the surface, that sounds a bit mundane compared to a war in the Middle East or Pentagon AI contracts. But if you actually scale that time savings across an entire major metropolis, the compounding impact is huge.
It's massive for reducing carbon emissions, and it's massive for overall business productivity, but you also have to think about the intense level of ambient surveillance required to actually make a system like that work. You literally need high-definition cameras covering every square inch of the facility, constantly feeding live data back to a centralized AI brain. In a lot of Western cities, that kind of infrastructure would instantly spark a massive privacy outcry.
Oh, absolutely. There would be lawsuits immediately.
But in Dubai, it's culturally viewed as just a necessary utility for operating a modern smart city.
It really seems like Dubai has collectively decided that the trade-off for hyper-efficiency is completely worth it. Whether it's tokenizing billion-dollar cargo ships or using computer vision to track consumer cars, they are leaning all the way in on the tech.
They are actively building out the infrastructure for the 2030s, while a lot of other regions are still stuck in court litigating the 2020s.
All right, so let's try to pull all of these wildly different threads together. We started today with this intense macro fear. We've got war, Operation Epic Fury, and panic selling in traditional markets. But right under the surface, we have the Bitcoin Lightning Network, quietly doing billion transaction months. We have PayPal actively building programmable money for autonomous AI agents. We have the Pentagon integrating open AI models into classified defense clouds. And we have Dubai tokenizing heavy maritime industry.
The absolute common denominator running through all of this is automation. The legacy human systems, whether that's traditional diplomacy, legacy banking infrastructure, or human speed decision-making, they are all visibly breaking down or causing massive friction.
Right.
Meanwhile, the automated systems, the crypto payment rails, the AI agents, the smart city grids, they are rapidly accelerating.
It honestly feels like the core economy is beginning to completely decouple from human sentiment.
And that is exactly the deeper implication of that USD.ai project we talked about. Think about it. Right now, global markets crash primarily because humans get scared. We read a scary headline about a conflict, we feel biological fear, and we panic sell our assets.
Which is exactly what happened this morning.
Right. But if, say, 50% of all global transaction volume in the near future is being executed by autonomous AI agents, do they feel fear?
Wow. If an AI agent running a global supply chain reads a news report about a war, it doesn't panic and sell everything. It just instantly recalculates the shipping route and mathematically hedges the currency risk.
Precisely. It just executes cold logic. We might actually be moving toward a world where our financial markets become incredibly efficient and incredibly stable simply because they are no longer driven by human emotion.
But the defense side of that exact same coin is the terrifying part, isn't it? I mean, a financial market that doesn't panic is great, but a defense system that doesn't hesitate, that is a completely different story.
And that is exactly why that human-in-the-loop clause we saw in the OpenAI contract is probably the single most important sentence written in the tech sector this year. We just have to hope that legal clause actually holds up against the overwhelming pressure of technological speed.
March 2026 is definitely turning out to be a profoundly pivotal month. We will keep doing our best to track the real signal through all this digital noise. Thanks for doing the deep dive with us today.
Stay safe out there, everyone.
See you next time.